Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Boom, and we're live. Good day, good morning, good afternoon, everyone, and welcome to another busy day in the financial markets with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets before the opening bell. So buckle up, hit that subscribe button, and let's get started. Here's what's happening in the markets today, July 27th, 2021. European stock markets weakened further today following China's regulatory crackdown, with the DAX 30 tanking 1%, the CAC 40 losing 0.9% today, and the FTSE 100 in the United Kingdom also shedding 0.9%. The European currencies also felt the pressure today, with the euro and the pound opening to the downside this morning and continuing the downtrend on the European trading session. But they marked some gains just ahead of the US opening bell. However, with the COVID cases increase in Europe and with the ECB Monetary Policy Meeting on Thursday, investors will take a cautious approach most probably this week. Crude oil prices were almost flat today as traders continue to weigh supply-demand numbers as Asia is tightening its restrictions after a surge in COVID cases, and with less demand as usual from the West. Only the crude oil inventories might give traders a sense of direction for the week. Let's move on to the US dollar index, which, funny enough, gained today on the European trading session, pushing gold futures below the $1,800 mark. But with the Federal Reserve two-day meeting on the radar, things might change fast if any dovish comments will be made by the Fed. Cryptocurrencies also retracted from their recent rally after Amazon denied the news that the e-commerce giant is looking to implement crypto payments for its users by 2022. After the comment, Ethereum and Bitcoin both retraced, with Bitcoin retracing over $3,000, trading at $37,200 earlier on, while Ethereum also losing $300 today, trading a bit over the $2,200 mark. With Ethereum's London hard fork just days away, some would have thought that Ethereum will go through the roof. However, there were rumors that the long-awaited hard fork might be delayed due to unforeseen bugs or malicious user behavior observed in the network. U.S. markets open along with my very guest for today coming up. Stay tuned. Right, with the economic calendar almost empty today, investors will probably take this opportunity to focus on the stock markets, as the earnings calendar this week brings out the tech companies, or the so-called FANG stocks. Today we have Apple, Microsoft, Alphabet, and Visa reporting their second quarter earnings, along with another 30 or over 30 high-cap companies. So things might heat up easily after the opening bell. One of the high performance performers yesterday was Tesla, which reported a surprising gain of $1.45 per share and a net revenue of over $1 billion, along with a margin of 25%. Now, I'm waiting for my special guest for today to reconnect, and then we can start the conversation about Tesla, about the earnings season, about Bitcoin and Ethereum as well. So allow us less than 2 minutes, and by then my guest should be ready. Stay tuned. We're coming back live in 2 minutes.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, we seem to be encountering some technical issues, but my guest is doing his best to join us, and probably he will join us in the next couple of minutes or so. Until then, crypto news, guys. We saw some interesting spikes in crypto prices yesterday. Let's see what triggered that, and let's see what else is happening in the crypto markets. So, here we are. Following an announcement yesterday that Amazon might incorporate crypto payments into its platform as soon as 2022, we saw the price of Bitcoin rallying up to $40,000 yesterday, creating another FOMO sentiment among investors. The rumor was dismounted as soon as it came out when a spokesperson from Amazon cautiously denied the rumors, but stated that the company is indeed interested in crypto currencies, but has no specific plans to onboard digital assets just yet. All this frenzy around Amazon and cryptocurrencies started on July 22nd when the e-commerce giant posted a job opening for a digital currency and blockchain product lead. 4 days later, London City AM newspaper ran a story citing an insider who claimed Amazon was definitely preparing to support Bitcoin payments and launch a native token. As the rumor didn't materialize, some investors decided to liquidate their long positions on Bitcoin, being thankful to exit the trade with just a few $1,000s profit. However, the crypto market seems on the edge of a massive surge, with more and more institutions talking about crypto payments, but with a global regulation still missing, we might still see many aggressive swings from cryptos in the upcoming months. There's one thing, though, that might give the markets a kick in the upcoming days, and that is the long-awaited Ethereum London hard fork that is supposed to happen on the 4th of August. This hard fork contains 5 Ethereum improvement proposals, or EIPs, each featuring code changes aimed at optimizing and improvising the world's second largest cryptocurrency by market cap. One of the most controversial Ether improvement protocols, or EIP, is the EIP 1559 due to its radical redesign of the network's fee market. And this is where it gets interesting. While the EIP 1559 does not introduce a Bitcoin-like supply cap on Ethereum, it does activate a mechanism to curb total supply growth over time by taking a variable amount of Ethereum out of circulation each time a transaction is executed. The simulations that started on June 8th this year suggest that the activation of EIP 1559 over a period of 1 year would have burned a total of almost 3 million Ethereum for a net reduction of 76% in Ether supply growth over that period. So, in addition to creating a Bitcoin-like narrative of limited supply to Ethereum, the 1559 protocol is expected to improve transaction waiting times and remove the fee uncertainty that damp developer and also user adoption of the apps. In conclusion, the Ether Improvement Protocol 1559, and the most controversial one, is expected to solidify Ether's role as a form of payment for using Ethereum's computing resources and interacting with the network's broad of the apps by requiring payments of transaction fees on the network to be exclusively paid in the network's native cryptocurrency. Not Right, everything is nice and sexy so far. However, technology change and upgrades do come sometimes with a certain risk degree. And this risk degree is explained by AMB Crypto. We might see a delay for the long-awaited London hard fork. The risk posed by the EIP 1559 protocol is its proposed changes to reward dynamics and payouts to miners who face reduced earnings for their work with the activation of the 1559 protocol. Instead of gaining 100% of transaction fees, miners will only receive tips from users through an optional inclusion fee paid by users seeking priority for their transactions. In other words, bribery at its best, guys. So the problem that the network is facing right now is a potential revolt from miners that are not happy with the way they are rewarded for their work under the new improvement protocols. Some miners might leave the network or even sabotage it. And if that's the case, we might see big delays in transaction processing times and security concerns. At its core, the Ethereum Improvement Protocol 1559 is designed to make transaction fees on Ethereum less volatile and more predictable. So unless one of the worst case scenarios happens, Ethereum's path might be paved with gold and diamonds. This being said, guys, we're going to take another 30-second break. I see our guest managed to join us. So I will introduce our guest for today in less than 30 seconds. Stay tuned, guys.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, as I promised, I have the great pleasure of introducing to you Mr. Andrew Sachs at ETX Capital from the heart of London joining us today. Andrew, very, very good afternoon. How are you?
Hello, Andrew. Very nice to see you. How are you doing?
Always good, always good. Always looking to pick on someone, to pick on something, and to see what's happening with the financial markets. Now we're at the peak of the earnings season, and this week is huge for the FANG stocks, or the big players. One of the high performance yesterday was Tesla, which reported a surprising gain of $1.45 per share and a net revenue of over $1 billion, along with a margin of 25%. What do you think about this? I mean, were you expecting this surge in Tesla revenue?
I think it's quite remarkable, really. And actually, there's more to it than just the core business that Tesla gets itself involved in. Tesla is a relatively fringe business in the automotive industry. But really, I think partly the confidence that investors have in it has much more to do with its product, with its electric cars. Because let's be fair, although they're very popular, they don't outsell mainstream mass market, relatively lower price vehicles that are made by established manufacturers that have been in business for over 100 years. Really, the confidence that investors have and the reason that there's so much revenues and so much influence with Tesla is because of Elon Musk's disruptive mentality and how he approaches new technology in a certain way. If you look at, you were mentioning cryptocurrencies earlier, and whatever anyone's opinion on those are, they are very much in the frame at the moment. And Elon Musk is a self-appointed, self-styled advocate of these, and he's been investing in them. And Tesla, the Tesla company has $150 billion worth of bitcoins or something like that. I don't know the actual figures, but it does have
1.5 billion.
How much, sorry?
1.5 billion.
Yes, 1.5 billion, exactly. That's right. So there you have a company that's investing in cryptocurrency, and I think that attracts a certain type of investor. That is really what's bolstering their revenues, and it's bolstering attention towards that company. It's more than just an electric car disruptor. It's a influential, massive company which is on the top of the American stock markets, and There's a huge amount of investor confidence, always in the news. It's one of those, it's joined the FANG stocks to a large extent. You could call it a big tech company these days.
Do you think the Bitcoin stunt helped Tesla reports this quarter, Andrew?
Yes, I certainly do. And the two are separated. Elon Musk keeps his own interest to some extent separate, but he is also very much in charge of Tesla. So he really has gone down the Bitcoin and Ethereum avenue with Tesla. So yes, I do think that has affected the revenues and figures, and I think there's much more to it than just being a tech disruptor. It's almost a cryptocurrency firm these days, and it's got the attention of a lot of investors. It's very interesting for people who would ordinarily look at other mainstream stocks like Apple and Facebook and so forth. You could put it in that category. It's not really in the same category as companies like Ford Motor Company. It's in the FANG category, really.
Yes, correct. Now, one question I have regarding this. Now, is there a downside that Elon Musk turned into one of the key players in the crypto sphere for Tesla? Or could there be a downside for Tesla?
Most certainly. I think he's doing a risky job there, but I think he has to, because he can't make his point as a disruptor without doing so. There are other electric cars nowadays which are better than Tesla. The product was a disruptor. It was seen by a lot of motor manufacturers as, oh, let's wait and see what Tesla does. They've come out of nowhere, come out of Silicon Valley, trying to disrupt an industry that's 100 years old. They didn't have as many resources as the big established companies in the industry. So they sat back and waited to see if there was any demand. And here you have Elon Musk, who is different to a car industry executive. He is a very sort of eccentric man, very much a disruptor. He's social media orientated. All the tech orientated people and the social media orientated people follow him. He is always courting the media. He tweets things. You don't see executives from the traditional car industry doing that. So I think they still sat back and say, let's see whether there's much demand, and then we can make what he makes tomorrow. We've got lawyers, R&D team, we've got established production facilities. We can just put it into production tomorrow. And that's what they did. You can now get electric Porsche Taycan. You can get a Ford Mustang Mach-E, which is electric. You can get Volvo, which is one of the best manufacturers of premium cars in the world, is going all electric. It's already producing hybrids that are plug-in, and it will phase out all the purely internal combustion powered cars very soon, and it will be all electric by 2030. So it's not about the product, it's more about Elon Musk's courting these risky investments, and he behaves almost the way like these Reddit group people do on the meme stocks. Yes, he's that kind of person. So he's seen as someone who's got guts, and he makes very risky but calculated decisions, and I think there are a certain number of people who quite like that.
Yes, I'm with you on that 100%, Andrew. Now, it seems that going to space unites people these days. Maybe there's something happening up there, as both Elon Musk and Jeff Bezos came back from space with crypto thoughts. Yeah, a couple of days ago, there was a news that Amazon might accept crypto payments, and we saw Bitcoin's reaction within hours after the announcement. And as soon as Amazon denied the rumors, Bitcoin tanked.
That's right.
Was that a short squeeze, Andrew? Buy the rumor, sell the fact?
It was the usual scenario of rumors, which the whole cryptocurrency thing is built on rumors. You have Elon Musk knows that. He's going back to him. He crashed the whole market back in April or May this year. He crashed the whole market by almost $700 billion or something wiped off the face of these cryptocurrencies because he spread a rumor. And then he says, oh, now I fixed that problem, and I've been in touch with those Bitcoin companies that were causing the problem that I made up myself, and now it's gone back up again. So I think this is another circumstance like that. And Jeff Bezos, although more of a businessman and more calculated, is someone who would perhaps not succumb to rumors. And if there's a rumor that the company is putting out some advert looking for a cryptocurrency expert, and then everyone starts jumping on that story, they will put it straight because they're a big public company and they're very corporate, and they'll say, no, that's not exactly what happened, and therefore you can't really take that seriously. And then, of course, the value goes down because it was all built on speculation in the first place. And
True.
talking about going to space, they're all 60 years too late, aren't they? You know, you have to see there Jeff Bezos, who is the senior executive of a massive company, and then he goes up to space, and then he lands in Texas, and he gets out of his spacecraft whooping and doing high fives in a very cartoonish manner, when he doesn't realize perhaps that Yuri Gagarin did that 60 years ago, didn't get paid for it, and kept his composure the whole time.
When are we going to space, Andrew? I want to see what happens there and why everyone that goes there comes back and buys crypto. Do you have 28 million available? I'll meet you halfway if you want.
That's a very bizarre association that there would be anything to do with the two. I think it's an ego battle between three very strange and eccentric individuals, Richard Branson, Jeff Bezos, and Elon Musk. All three of them are eccentric, and they all do strange, they court fashions. You know, you have Richard Branson a few years ago with a woolly jumper and strange beard and saying, oh, let's save the planet and I don't eat meat. And then he goes and flies to a rocket to space. And then everyone claps and cheers as though they've never seen it before. But back in 1961, this was pioneered by the Soviet Union Space Authority, and Yuri Gagarin landed exactly the same way 60 years ago. So I don't really see it as anything more than a battle of egos and a case of, you know, you're going to save the planet, but I won't because I'll do whatever I want.
All right, fair enough, fair enough. Right, let's get to more earthy things. Today we have Apple reporting, and even though they flirted with cryptocurrencies a few months ago, no major announcement was made just yet. Do you think Apple can still compete with the tech giants that already got involved in crypto, or can Apple still survive without getting involved in cryptocurrencies, Andrew?
Yeah, they certainly can. Apple is a very interesting company, and they exude class and establishment. It might have been a unique revolutionary product when it came out, but now you could consider it an established leader. And actually the iPhones were introduced almost, you know, going back to the 2006, 2007. It's a long time ago now in terms of that type of technology. And at the time, its inventors came up with an idea saying, well, you know, why would anybody pay a lot of money extra for a phone when they've already got one? The reality is that people buy these products because of why they're made, not because of, you know, if you go and say to someone who had a Nokia phone back in the 2000s, oh, do you want a new phone? By the way, it costs 10 times as much as the one you've already got. They'll say, no, thanks, I've already got one. But the real reason is because people buy it because of why it does the things it does. So Apple has a very classy, very established, high-tech, polished image. And they don't court strange fads. They're a very progressive company that builds on in the right way a technology company should be. They build on their established product. So the new phone comes out, and it's effectively a derivative development of the previous one. So they can certainly survive and do very well without getting themselves involved in very risky fads. You never see them do that, and they're always still very much at the top. They do very well as a company, and all their loyal customers have faith in the company, so they will keep buying the product.
True. Apple was flirting with cryptocurrencies. They had an app, a wallet at some point. I didn't follow. I don't know exactly what happened to it. Do you reckon they're going to get involved in cryptocurrencies?
I think only if it becomes absolutely necessary, to the point where there is so much of the population of the world using these and not any fiat currencies, which I don't see happening really. Only then, yes. Because let's say they go completely digital. They already are. You have Apple Wallet. It's connected to your bank account. No actual cash or use of cards. You can go around carrying just your phone and no wallet and no nothing. And you in your watch, and you can tap. I mean, me, for example, when I'm on my way to the office, I tap my watch on the London Underground turnstile and it opens the gate. There's literally no need for them to go down the route of courting unbacked risky, volatile methods of payment that are subject to potential sanctions and regulatory issues, which they don't want to get themselves involved in. They're a tech provider. They're not a financial services company. So I think they will stick to high-tech methods of operating existing ways of paying.
Right. Okay. Fair enough. Fair enough. One last question, Andrew. The reports for this quarter in terms of earnings, yeah, were astonishing. They came out great with companies announcing great numbers. But the question is, how long do you think this will continue for, Andrew?
I think that the big, huge blue chip companies that are listed on major exchanges, such as the London Stock Exchange, NASDAQ, New York Stock Exchange, big corporations will continue to flourish. They have done so over the last year and a half, whilst a lot of small businesses have gone into liquidation and administration because they can't manage to sustain themselves during lockdowns, especially businesses that have physical premises and rely on customers actually going there to do their transactions. But the big companies are either too involved with the government, or they are actually doing long-term contracts. I mean, you have companies like Serco here in the UK that are tied in with the government, and you're talking about very, very high value, long-term contracts, private finance initiatives for public sector. You have also big pharma companies that are selling, they only need one customer nowadays. They're selling their products to the governments. You also have them able to adapt quickly and start doing online e-commerce without really too much of a problem. So I think they will continue to flourish, and the smaller to medium-sized businesses will not, because you now have a situation in the Western world, especially in Europe and Britain, where you have three sectors: big government, massive corporations, which are mostly publicly listed on prestigious stock exchanges, and small businesses. And there's becoming an increasing gulf between them. You have the larger FTSE 100 and NASDAQ and New York Stock Exchange listed companies doing better and better, and more small businesses going out of business. So I think we're seeing a big corporate dominance at the moment. So I don't think there will be any crashes or downturns in corporate stocks. I mean, that's just my opinion. It's not a fact. It's just that's how I see potentially when you look at the last year and a half. There's been we're in the biggest recession for 300 years, yet the blue chip companies keep flourishing and keep posting massively inflated results over the last, some of them way bigger than the last 3 or 4 years.
And this is where it gets worrying. And I'm going to ask you another question. Considering the sky-high inflation that's happening right now, are there any signs of a market crash or a potential market crash on the horizon?
I don't think the inflation is that high. If you look back to 1991, the interest rates were 15% in Western countries, and that meant that people who had mortgages and things like that, they all of a sudden had to go from paying, for example, let's say they lived in Europe, they would have to pay, let's say their mortgage was 200 or something, it was suddenly 1,500. And of course, they couldn't pay it. So a lot of houses got repossessed. And then a lot of business loans were called in because businesses couldn't pay back the repayments on their cash flow arrangements, and it bankrupted businesses. Nobody's in that situation right now. You even had small businesses blowing their COVID support loans on follies for themselves, a lot of fraudulent use of it. So they didn't necessarily even think ahead, oh, there might be inflation, there might be trouble. Nobody really minded, because now you can just bankrupt the company and start up another one tomorrow. So I don't think there will be a big problem with any massive inflation, because I don't think the inflation is that big compared to how it has been in previous recessions. It's just big compared to how it's been for the last 10 to 15 years. But it's not anything that is insurmountable by companies in Western countries.
Right. And when should we start getting worried about a potential market crash or correction of the markets, let's say? What are the first signs of a potential market crash?
I think the commodities sector is one that will be telling, because at the moment you have high demand for oil, even though there is a lot of greenwash around. In America and Europe, there's a lot of government diatribe about switching to sustainable energies, and there's a lot of factories and big industry being told to do so, and they're being given a target. You saw Shell Oils the other day. They took the Dutch government to court, saying we don't agree with the timeline that we've been.
Yes, we're losing the sound for some reason. We're losing reception. Can you hear me, Andrew? Are you still with me? Right, okay, we seem to be having, again, some technical difficulties in London. I don't know if that's because London is celebrating for 1 week now the fact that most restrictions in the country have lifted and people are advertising heavily. Right, we had Andrew Sachs with us today. Andrew, if you can hear me, thank you ever so much for being with us today, and I'm looking forward to see you next time. Once again, very, very sorry for the technical issues we had so far. Right, ladies, gentlemen, traders, we're going to take a 30-second break, and then I'm going to be coming back live with the charts of the day and the signals of the day, as we are already half an hour into the US trading session. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, 25 minutes into the US trading session, beautiful people, on this beautiful Tuesday, 27th of July, 2021. Let's have a quick look at the most traded assets and see how the markets performed today and what happened, most importantly, what happened at the opening bell. So crude oil WTI on a 60-minute chart, guys, we're looking at $71.84 after crude oil prices were almost unchanged from yesterday. We're looking at RSI stochastic pointing downwards. We might see a retest of that 200 moving average, but so far, this is the only indication that we're getting from these charts. Nothing has happened with crude oil just yet. If we have a look at the economic calendar, we can see that at 11:30 GMT plus 3, we're going to have the API weekly crude oil stock. And of course, tomorrow, we're going to have the crude oil inventories, and the Cushing crude oil inventories, followed by the Fed interest rate decision, the FOMC statement, and of course, the FOMC press conference. So probably traders are taking a more cautious approach to trading the black gold. Let's have a look at the euro, which had an impressive rally today on the European trading session. We saw the euro starting its journey to the downside today, but as we got closer to the opening bell, it started gaining, and we saw it pushing all the way up to 118.28. Yeah, versus the 118.11, which is the current market price. RSI pointing downwards, stochastic pointing upwards. We see a bit of divergence between indicators. However, yeah, if we zoom out a bit and we look at the charts the right way, and if we top it up with a support resistance level, yeah, we can see a retest, yeah, of the highs at 118.21, 118.23, yeah, a retest, and then we are looking at the euro pointing to the downside. We're going to see what's going to happen in the next couple of hours or so. Meanwhile, we're looking at the pound, which had a very similar trajectory to the euros today. It started nice and early this morning, pointing to the downside. Yeah, at some point during the day, it had enough and it started correcting again. And we see again a red candlestick opening, 138.18 for the pound versus the US dollar, with the RSI pointing upwards, yeah, and the stochastic pointing in the opposite direction. We're going to see what's going to happen. However, the European currencies remain under a bit of pressure ahead of the Fed interest rate decision tomorrow. The USD JPY pair traded to the downside the entire European trading session, 109.92 for the US dollar versus the Japanese yen this afternoon, with the RSI stochastic way into the oversold levels, and we see the price action falling below both moving averages. The sell-off might continue for USD JPY this afternoon, as again traders are awaiting for the Fed interest rate decision tomorrow, and the economic projections. The Aussie dollar followed the European currencies, with a retest of that 200 moving average to the upside on the European trading session today, and we see it pushing lower half an hour into the US trading session. Currently trading at 0.7359 versus the US dollar. RSI stochastic, both indicators point downwards. The price action fell below the 200 moving average. We might see the sell-off continuing for the Aussie dollar, which has been ranging, funny enough, for quite some time. Between 0.7343, and the average highs, which are 0.7393. Okay, so we have 50, 60 basis points, fluctuation in the exchange rate. The USD CAD, again, did not manage to settle above that 200 moving average today. We saw it behaving very similar to the European currencies. Okay, at some part today of the European trading session, 125.78 for the USD CAD. We see that 200 moving average playing an important part for the price action. Once the price manages to settle above that 200 moving average, then we can definitely talk about a potential strength of the US dollar. And at that point, probably traders will eye for the 126.74 level as their first take profit target. Okay, and then they're going to take it gradually higher. If this upward movement will continue, 127.34 as the second target, and as the third potential take profit target, 127.93 for the USD CAD. But we're going to get more and more indications about the USD and its trajectory tomorrow, or as we get closer to tomorrow. Let's see what happened at the opening today. We see the S&P 500 opening to the downside. So did the Dow Jones Industrial Average, which retested that 200 moving average today at the opening, $34,991.02 for Dow Jones Industrial Average this afternoon, while the S&P 500 is currently trading at $4,404.30. Let's see, guys, what's going to happen. Again, I'm not going to be surprised if I'm going to see retests, if I'm going to see shake-offs in the markets, as the FANG stocks, the big boys came out to play this week, and the earnings calendar is packed with over 300 high cap companies reporting this week. Let's have a quick look at Apple, which opened to the downside. The price is still well supported by the 200 moving average, $148.59 for Apple this afternoon. Amazon is retesting that 200 MA to the downside as well, $3,665 flat for Amazon. Nvidia seems to be heading to the downside as well, showing us $192.70 and dropping as we speak. The US dollar index, we saw it bouncing off that 50 moving average. Still, the pressure remains very high for the US dollar index, which traded most of the day to the downside, yet 1 day ahead of the Fed interest rate decision. What's a bit worrying for the US dollar index? If we're going to look at it on a 1 hour chart or on a 4 hour chart, we can see the US dollar losing a bit of ground in the last couple of weeks or so, and not being able to match at least the highs at 93,200, which it had on the 21st this month. Now, let's have a quick look at gold, which fell below the $1,800 threshold today once again, and we can see it pushing to the downside after it got rejected by that 200 moving average, 1,799.45 as we speak, with both RSI stochastic pointing downwards. And once again, if the price action falls below the 200 moving average, we might see gold futures tumbling even further. Tesla opened to the downside today, $645.45 for Tesla. Let's see what's going to happen. The same Tesla which yesterday surprised everyone with more than $1 billion in net income for the second quarter, which is up tenfold from a year ago. Right, Facebook traded higher. Funny enough, apparently all that hate on Facebook and all the haters seem to be doing really, really well. $371.07 for Facebook this afternoon, and Alibaba open to the downside. Look at Alibaba tumbling $184.78 half an hour into the US trading session. Right, quick touch up on Bitcoin, which is currently trading at $38,342 after tumbling overnight following the news that Amazon does not incorporate cryptocurrencies as payments this year. Yeah, we saw it recouping some of the losses overnight on the European trading session today. However, most signs are pointing to the downside today for Bitcoin and probably Ethereum as well. Okay, there we go. Very similar movement for Ethereum. We saw sharp gain yesterday, followed by some profit taking. Yeah, we saw a bit of a correction happening today. However, the candlesticks did not manage to touch the previous levels, and they stopped somewhere in between, which usually translates into a bit of selling power, yeah, on both Bitcoin and Ethereum. Right, this is what's happening so far, guys. We are well over half an hour into the US trading session. I'm tempted to have a look at some trading signals coming from investing.com this afternoon. Let's have a quick look and see what is happening. Again, the trading signals are not a secret formula to get rich fast. Yeah, but they might give you a bit of hint on where the markets are heading to. So the euro and the pound seem to be strengthening versus the US dollar with three strong buy indications, yeah, indicated by the analysts at investing.com. We're looking at USD JPY with strong sell indications for today. USD CHF the same. Yeah, and USD CAD, on the other hand, is indicating for buy and strong buy positions. The Aussie dollar so far shows four strong sell indications versus the US dollar. Yeah, and the euro seems to be weakening versus the pound with strong sell and sell indications, yeah, all over the board. The Kiwi dollar follows the Aussie dollar usually with four strong selling indications. And as we get closer to the bottom of the chart, yeah, we can see a lot of uncertainty between the GBP and the Japanese yen and the Swiss franc, yeah, and also the euro versus the Japanese yen and the Swiss franc. So in times like this, usually traders tend to follow the four-of-a-kind signals, okay, which are strong sell indications for Kiwi dollar versus the US dollar. Again, we see strong sell indications for the Aussie dollar versus the US dollar. Yeah, and this is about it. Yeah, in terms of euro and the pound, keep an eye on the latest news and what announcements you might have in the economic calendar, and there might be some fluctuation. Let's have a quick look at commodities for this afternoon, see what's expected to happen with gold, silver, and crude oil WTI, as well as natural gas. Okay, so far, gold and silver indicate selling power more than strength. We're looking at copper indicating four strong buy signals, and crude oil WTI and Brent oil are not decided yet which direction to take. Strong buy is the only signal that we get on a daily chart. Yeah, however, we're going to have the API crude oil inventories today, so beware for any changes that might happen. Natural gas, on the other hand, is heading to the downside, falling below the $4 mark. Yeah, which had yesterday trading today at $3.98 and indicating three strong sell positions coming from investing.com. And US wheat seems to be weakening as well, $678.10 for US wheat this afternoon. Yeah, again with strong sell indications and sell indications on a 5-minute, 15-minute chart and hourly. Right, this is it, guys. This is what's happening on the markets today. We have a big day in the economic calendar, in the earnings calendar. Sorry, the economic calendar, unfortunately, today was pretty empty. The only news that came out, yeah, was the core durable good orders in the United States, which came out depressing 0.3% versus an expectation of 0.8%, and 0.8 versus 2.1% expected by consensus. Where is the chart? There is the chart. Yeah. So this is what we're looking at right now. There we go. Yeah, in the center of the screen, you can see the core durable good orders for the US dollar. Hey, the HPI composite came out 17% better than expected versus an expectation of 16.4. And the consumer confidence for July also rose to 129.1 for the US versus the 123.9, which was forecasted by consensus. Right, this is it. We're going to see some swings happening, some volatility happening in the next 24 hours. So remember to trade responsibly and may all your trades be in the money. I wanted to say something, but it slipped my mind. Do not take any unnecessary risks yet today and tomorrow, guys. The pressure will be tremendous on the financial markets. We might see very big swings happening, especially from the US dollar, the majors, the major currency pairs, and cryptocurrencies as well. Join me again tomorrow for a new round of market talks. And until then, please remember to trade responsibly and may all your trades be in the money. This video was sponsored by Markets.com.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.